Good morning, everyone. This is Ryan Enter with your Wednesday, October 23rd market commentary. As we normally do on Wednesdays, let's take a quick look at the weather maps for harvest progress. So this is the first map, the 1 to 5 day. We see that other than Ohio, most other areas should have a pretty good 5-day stretch of harvest here. Ohio does get hit in the area south there, but the market will see this as most every area harvesting. Let's flip over to 6 to 10 day map. Also looks pretty good for most areas, again, except for Indiana and Michigan. But we do see quite a few areas that should be able to put together a nice 10-day stretch of harvest here. So that's good news for all of us trying to get out there and get through the crop. Let's flip over to the charts quickly here now, looking over at the December corn chart. Two things we want to point out. The report day low of 378 and a quarter in December corn is where the market left price at once the USDA reminded us that demand is still a pretty good size issue we have to work through. And then we had the China excitement bounce to 402.5. We see here from all the bars after that China excitement bounce that we're still slowly correcting back from that China excitement headline. So the question here is if December corn intends to correct all the way back to that report day low around 380. Right now the chart showing early signs that we could be stuck in a range between that report day low of 380 and if we do find any more short-term positive headlines, a high of $4. So 380 to $4 could be our range. Now let's look at a long-term corn chart. This is a July contract-only corn chart going back to 2015. Just to put things into perspective, if we do find good China news, what are some highs to look for? And if we do happen to raise yield, which I don't think many are looking for, but what lows could we be looking for? And we see that basically since 2015, 350 to about 450 really puts all the prices you see over all these years. This July corn fits between that 350 and 450. So again, this is just a quick overlook of the last few years in case any analyst or any other market talk starts to talk about some extreme levels. We know that getting outside the 350 to 450 range for July corn is one heck of a feat. Now flipping over to cattle, let's look at that December cattle chart. We see we're still struggling to take out those 6-month highs of 114.92.5. We recently did get close at 114.42.5, but then we saw a little bit of what appeared to be panic cash selling from another plant issue last week. Futures so far this week, they're optimistic because we're on a 16,500 lower show list for the week. Would imply a higher cash trade. We've seen general support in the futures, but again, after seeing a little bit of panic cash selling, the futures are putting support in the market, but they are cautious. So as we always do, we'll be looking to see what we get for cash bids here today. Again, when we see cash bids, do keep in mind that last week's average cash trade was 108 even. So we'll see what we get for starting bids today or tomorrow. And know that with that lower show list, we'd probably be looking for $1 to $2 higher.